Hello, Warriors. Let's have a great week, as Ryan just said. Paul, how are you? Mike, Alexander, that's very nice. Yeah, I'll take another couple 12 years. Andrew Pert, new name to me. If you're new, welcome to the best community on the net. Hi, Michael Bergman, Michael Wiseman. And we have a dollar correction happening here, or maybe
Morning,
the
we can't see your
pullback.
charts, by the way, Dale. I
I
don't know
know.
if you're showing. Oh, sorry. Thank
It's
you.
okay. It's all right. You're so impatient.
I am, aren't I?
I am too. So why don't I start off with Ryan on cable strength? Generalized dollar weakness, buddy. Ryan? Okay.
Hello,
Let-
hello,
oh,
hello.
Here is.
Yeah.
Can you hear me?
There, you were
Can you hear me?
muted. Yeah, now I
Oh,
can.
yeah. Talking to myself as usual.
Okay.
Yeah, we're seeing a bit of dollar weakness coming in at the moment. I said on the flow show this morning, it's going to be important to see how you guys over there react to the debt ceiling stuff. And it seems like you're going to unwind a lot of this bond yield rally and the dollar, perhaps.
Yeah.
Cables out in front as always, just on the volatility basis. But I think there's a bit of central bank play there as well, because euro sterling's off, breaking down through the levels.
Yeah, made a new low. Actually, I'm buying some of it here, and I'm, hoping I have a money stop in that it could be a third drive. But it looks pretty lousy there on the 2-hour with the RSI. But the daily, there might be hope that they turn it. We'll see. Also very strong in gold, yen taking a breather. That's something that Mark said on Friday. It's exactly the scenario he was looking for. Lower yields, lower dollar, and here we go. And of course, NASDAQ up 1% or so. K-Man back?
Nope, he's off the rest of the week. Of the week.
All right.
But that yen was looking completely different this morning when it was up testing 141. And then we had a headline drop that there was an emergency meeting of the BOJ, MOF, and F.A.C.E. Market got a bit anxious over that, and it ended up being a nothing burger. It rallied to 140.65 and has been downhill ever since.
Yeah, so I think it also left a pretty good divergence at that last spike high. That's a negative day. So yields are going to come down and yen's going to come down. Could we get 136 yen in a few weeks?
It's possible. It's possible. I mean, I know Mark said it on Friday, but Blake's been saying it, Dale's been saying it, a lot of us been saying it, that once the debt ceiling stuff's resolved, the dollar could be in for a little bit of a tumble, and that's looking to be the case now. But you've still got the fundamentals that are going to come screaming back in, and they've not been too bad in the US. Big week this week, ISM, JOLTS, jobs, consumer confidence, NFP. So we could fall now and be back at 141 come the close on Friday.
I'm not so sure that the debt ceiling is resolved. There's an agreement in principle, but I don't have a lot of confidence in Congress. And there's already people squawking about it. Yeah. And the procedures, I don't know if you're ever a member of an organization where, they had the formal, when you could speak and this and that. Someone could try and drop an amendment on there that could cause time. It may not get done in time.
Yeah.
So I think this is a tough part right here.
Yeah. There's headlines crossing pretty much every 5 minutes now that things are pretty much open in the States. This senator is against it, this senator's for it. And we're going to get that until, I think it's next week, the votes, isn't it?
Well, they don't have to wait till the 5th.
Is that the sort of deadline?
I think they're voting, actually, I believe on Wednesday, if I'm not mistaken. Yeah.
Okay.
So,
all right. So that's pretty quick.
Yeah, we're probably going to get this to and fro from different senators throwing their oar in. But you've got to think, if the leaders have agreed this, then the majority of the the respective houses have got to be behind it, because they would have known all these negotiations.
Yeah, they're both weak leaders. We'll see.
Yeah.
Gold.
I have to agree with that. Sorry to interrupt. I have to
That's okay,
wholeheartedly agree, and just say I am shocked that they've reached an agreement. Sorry. And
Okay.
but you're right. It's not done yet. But when the leaders have, as Ryan said, have effectively
Yeah.
agreed, it's a matter of time. Maybe there's a bit of a shuffling here and there. Trying to get a few more things settled. But overall, I think it's going to be done, and this is potentially it is the good case scenario that we were looking for. So a 2-year extension. Markets should like that in the short term, but then after that we see. But for now, it looks like everything is okay, because let's face it, no government or no senator wants to be responsible for a government default or anything like that. So they might talk the talk, but when the time comes, I'm pretty sure it's going to be passed, and we revisit this in 2 years' time.
Okay. Well, yields are skeptical about it, because if it was done, they'd start discounting huge supply coming to the market, and yields are dropping.
I disagree with that. I think as the uncertainty was building, yields were rising. So now that the uncertainty gets taken out, you're right about more supply coming in, but let's think about it. Yes, there is more supply, but this is the US effectively bringing lots more debt out there. If we think that the Federal Reserve is never going to monetize any more debt ever, or maybe not ever, but you know what I mean, the next few years, then that's a good
joke, by the way.
that might bring tightness to the market, both in terms of the dollar and yields. But let's not kid ourselves. The Fed, at the first sign of any kind of crisis, the Fed's going to step in and start buying again, or reduce QT, or maybe do whatever they need to do to bring back a calmness in the market. So in the very short term, I agree with you. I think theoretically we should see a slight increase in yields because of more supply is coming into the market, or is priced to be coming in. But I think we are now reversing the increase in in yields that we saw as more uncertainty was coming towards the debt ceiling.
I thought it was more data driven, like a bad inflation number and things like that. So well, gold almost got to the breakout, and it's putting in a very nice candle. So if you're a bull, that was it, and we should blow. If you're a bear, we rally up to 1980, 2000, and there's another wave to the downside.
Well, gold took out those lows, those previous lows. So they were at what, 1945, 1950. We took that out. The low was 1932 today or something like that. So if this daily candle closes, green, but we need to close the week, above 1945. So patience. I don't think gold bulls are out of the woods yet. This could be just a little shuffle before the big number on Friday, but definitely the daily candle is looking good today so far.
Okay, so 2000 is my bull bear line on this for a continuation. Silver starting to kick in a little bit here. I guess you have to say 2450 is the bull bear line in silver for a continuation or for a failure up there. So it's still got room.
2430 to 2450. Yeah, silver is looking worse than gold. It has been looking worse than gold for a couple of weeks now. Let's see.
Yeah, but it looks okay. I mean, there's still money in if both gold and silver rally 50%. Just like if you're a dollar bull, there's some upside in euro. Blake was talking 108.50. I think there's a pip that you guys have on. 108.50, 109. And it still could be a rally to sell. So I'm not, is this reverting back to the major trend, or are we getting a bounce because the market believes we've resolved the debt ceiling? What do you guys think? I mean, are you looking to buy a dip in the dollar? Like say, here's the Dixie, like a pullback to 102?
Personally,
higher?
I'm looking to sell a rally in the dollars. I'm not doing it yet.
Okay,
But
you don't think that completed there? Steve, how about you? You've been looking for a shorting opportunity in the dollar. Was that enough?
It is too soon to tell. We need to see. We're talking about a reaction that has been unfolding for a few hours, literally, right? So from a price action perspective, this move has given us no data to work with. Now, my general approach that I believe that the dollar's move higher is corrective, remains 100% intact. That doesn't mean, though, that we've seen the end of the correction, right? So I'm not changing my medium term view. It's too early to formulate a short-term view and say, yes, it's been a few hours that the dollar has been reversing, so that has to be it. Now, in general, I remind you, I've been saying that in my opinion, when the debt ceiling issue gets resolved, that should help in the direction of the dollar finding a high and opening the door for further depreciation. So that doesn't change either. Now, we've made a big step towards the resolution of the issue, anyhow, the kicking down the road, because this doesn't resolve any type of issue. It just does what we've seen them do time and time again. So if this is confirmed, definitely will help in the direction of the dollar weakening once again. And yes, I'm still looking for an opportunity to be short the dollar.
But it's only been 2 hours.
Yeah,
okay.
Yeah,
All right.
I mean, you can't call a top or a bottom just because of a few hour reaction in the markets. It's extremely early.
You may not be able to.
Okay.
All
Be
right,
my
anyway.
guest.
All right, thank you. I'm long euro. So anyway, S&Ps, let's talk about this. This is the biggest throwover that I've seen in my career. So I don't even know if it's a throwover. It's just
not a throwover.
Parabolic. It's when we came out of this wedge and then tagged it. You can't consider this a throwover anymore.
No. This is definitely, technically speaking, not a throwover.
Runaway.
Yeah, but don't forget that I see people doing frequently this mistake. We know that ascending and descending wedges are terminal formations, but that only applies when the inclination of the formation is very steep. And this was more of an ascending triangle, right? And that is a formation that can break in both directions. You can have a break in the direction of the prior trend in an ascending triangle higher or a descending triangle lower.
I thought ascending triangles they were flat tops, and they usually happened at bottoms. They're reversal formations. So maybe it is. You know what? To me, it's still a wedge.
Yeah, but
I know it's not an ascending triangle.
Yeah,
the inclination. Just go to the book.
The inclination of this wedge was not steep enough to make it a terminal formation.
Okay.
So
right.
In this case, you can have breaks in the direction of the trend, which actually, they're also useful because they indicate a change in the market's momentum.
That's for sure. Yeah. Okay, so I hear that the hedge funds are getting short, so maybe the copper break is close to over. Or I think it was LME stats that showed hedge funds giving up on their long positions, getting short. What do you think of copper? I mean, it's been a big sell-off. It's still a higher low compared to this. Is this
copper
a break
bounced
to buy?
from Copper bounced from the best technical levels you could find.
That's a great segue for you to take over the charts.
All right.
And show that if you want, or if you're busy.
Yeah, I'll do it. Good morning, everybody. How's everybody doing?
Blake. Good.
Blake.
Nice long weekend. Dale, did you have a great birthday?
I had a very nice birthday. Yes. Thank you for asking.
Oh, very nice. Very nice. Okay. I'll take over from here. I'll just show you guys. This is the copper chart that has my attention. And you know, it's interesting actually. Let's pull up copper. Here's the 618 retracement, right? That's okay. That's from the, you know, I guess it was July last year lows to the spike highs in January. 618 retracement, ascending trend line, perfect confluence, horizontal support. Couldn't ask for a better level to bounce from. Now, question is, you know, is this going to hold and is this going to sustain? I doubt it. I actually think it's going to break down, but it's going to give some relief to like the Aussie that, you know, came really close to, well, it's trying to, you know, break down, you know, through that support. So it's kind of supporting that, but I doubt this is even going to be a false breakdown. Like the Aussie's probably not a bad short from here, you know, now that copper's already found its support. So I don't know. I haven't started shorting the Aussie yet, but it's something that definitely has my attention. But let's talk about the debt ceiling. So Dale, sounds like you're a little skeptical about the voting that's going to happen this week. We've got you know, probably Wednesday where we're definitely going to get the House voting. I would think would be Wednesday, and then after that we have to see what happens in the Senate, and I don't know if it's a slam dunk either.
Yeah, you know, now they make sausage, right?
Yeah,
and that's what they call
right, exactly.
So we'll see. I just think that, you know, everything has to go almost perfectly for it to get through. You know, and this might be the end of McCarthy's speakership, because many in his party think he gave away the store. And there was there was really no limit on spending for another 2 years. So any of the conservatives that wanted at least some fiscal discipline, they didn't get anything out of this, really.
Yeah. So how are they gonna, you know, go back to their constituents and vote?
They have the edge in the House. I don't know. Is it a simple majority, a super majority? What do you need to put it through? Just 50%, 51%?
I don't know, Dale.
Yeah, I don't either.
Yeah, I know. This is but here's the thing. You know, is there going to be some risks over the next couple of days? I think there will be, you know, before they eventually get something to pass. The way I kind of view it is we might get to past the threshold of the 5th, and the markets will worry. You know, will we end up defaulting on anything? Probably not. But, you know, will the markets, you know, get a little concerned? You know, it's interesting because we saw, you know, the markets respond this morning, and we got, you know, the S&P right at the, and remember, we gapped up on Sunday too, gapped up, kind of consolidated. We're moving up this morning. As you can imagine, there's going to be a gap ahead of the, you know, following the weekend, right into channel resistance too. How we react from here is going to be really interesting, because if you look at what's happening with the Dow is actually showing some signs of weakness this morning. Although the Dow has been underperforming, NASDAQ has just been kind of a runaway freight train, as you all know. But you know, what happens if the NASDAQ actually rolls over? That's the one that's going to have my attention, because we're such a strong breakout. But you look at what's happening with the dollar yen. The dollar yen moved higher, and Ryan, as you said it, which I totally agree. I was actually long dollar yen, and then this morning we were rallying back up towards 141. I guess I was asleep. By the time I got up, we were already reversed back towards 140, and I took my longs off. I had a long euro dollar. I took that one off this morning when it hit this trend line. Took my dollar yen off, and I'm like, I don't want to be long anymore. And I turned around and I went short because yields are reversing. So what do you, Ryan, since you and Stelios, you guys and Steve, you guys have all been around since, been up since early this morning for me anyway. You've got yields really reversing here. What's going to happen with the dollar with all this issuance from the Treasury? What's going to happen with dollar and yields? What are your thoughts here?
I think it's not going to be a big deal because we've done it before. They're not going to turn around and say we need to fill the account up in one hit. And so it's going to be a drawn out process. They've got 2 years effectively to do it until we have to do this all over again. Spending is going to come lower. They've still got other accounting tricks they can do, like the COVID funds they've got left over. A lot of the money that they put in that account is from tax receipts and so on and so forth. So the market likes to jump from one lily pad to another, getting its knickers in a twist. So liquidity problems, debt issuance is the next buzzword after the debt ceiling, but I don't think it's going to be a big deal. What we need to trade in right now is how much premium are in yields on the debt ceiling stuff. That looks to be reversing at the moment. How far is it going to go before the market says, okay, we've sold off yields, we've sold off the dollar, but let's remember the Fed are still hiking and the data's still pretty good.
Yeah, and so the strong data will be supportive of the dollar at some point.
Yeah,
is what you're saying.
Yeah.
Okay.
So we're probably just running from one side of the boat to the other until the buyers go, that's cheap enough for me. I'm going to pick some dollars up again.
Stelios, you had some views about debt issuance and how the dollar is going to be affected post deal. So what are your thoughts here? Have they changed at all?
No. I mean, the main argument that people have is that because there's going to be more issuance, people are going to need dollars to buy this debt. And so that's dollar positive. So my answer was, okay, let's issue 40 quadrillion of debt, and that will take the Dixie to 200. I mean, it doesn't make any sense. In the very, very short term, yes, of course, there might be some kind of tightening in terms of dollar requirements from the market, but we're not seeing it today. And I don't think that raising the debt ceiling more is in any way positive for the dollar. I really don't. But then again, my time frames are not a few hours or a few days. I tend to look at the bigger picture. So for me, this is they didn't have an alternative, though, right? I'm not saying they did the wrong thing, because really they had no alternative. The right thing to do would be to cut spending massively and bring your finances to some kind of normality, and don't spend more than you earn as a government. But that's never going to happen.
Greece tried to do it.
We're not able to do any of that. I mean, that's ridiculous. Do you know that the Greek 10-year yield is below the UK 10-year yield now? This is just
why?
Wrong. Oh, well, because the ECB is buying Greek bonds, right? Because we're now part of the whole. We were not with the previous government. The ECB was not buying Greek bonds, so that's why our yields were going through the roof. But now we have a stable government. It looks like they're going to stay for another 4 years. We have our second round of elections in 2 weeks' time, or 3, whatever it is, and there's going to be stability, and that's always welcome. But in the long run, I wouldn't like to be long Greek credit. Let me say it that way. We are not good.
Steve, you have something to say about that?
Something to say that's different to what Stelios said? No, absolutely not.
Oh, okay.
Love you, Steve. Love you, man.
I agree 100% with what he said.
All right. Well,
and that's another example, by the way, of the extreme imbalances that and the moral hazard that the whole centralized monetary policy hands-on approach is creating, right? We're talking about huge imbalances. I mean, Greece has not even regained, it should do so extremely soon, within the next few months, its investment grade rating, and it benefits from better yields than the UK, right? That is obviously something that should never be happening in a well functioning market. But but this is not a free market, right?
Well, speaking of free market, how about what's happening in Turkey?
Don't say that I didn't warn you.
This is a free
remember?
market.
You remember that I had said in advance. I had warned in advance that once the election is over, we should see further depreciation of the Turkish lira, because ahead of the elections, they were obviously doing their best to, to sustain the Turkish lira from suffering another, huge depreciation, because they didn't want to have any more of that ahead of the election. But they cannot keep defending the Turkish lira. It's too costly to keep defending it, because they need to be spending foreign exchange reserves. So now that the election is over, and for the next 5 years there is a specific government, in this case Erdogan, as I expected, got re-elected, they obviously cannot keep spending foreign exchange reserves at that rate. So we should see the Turkish lira depreciate even further. So in my opinion, it's a very bad idea for whoever thinks they should be doing so to try to catch the falling knife of the Turkish lira. I think the worst is yet to come.
You know what? I'm just gonna get long some Argentinian pesos today.
Oh my God.
That's what I'm gonna do. I'm just gonna do that instead of lira. Hey, by the way, Tommy said the Nasdaq is at the 618 retracement. Let me go ahead and take a real quick look, just because you might be looking at the let's let me pull up the Nasdaq really quick. Where the hell is it? Okay, here's the Nasdaq 100, and we're just beyond the 618 retracement right now that I see, and this is the Nasdaq 100. But if you look at the composite's nowhere near that. Matter of fact, the composite is somewhere near the probably 38% retracement. Actually, it's nearing the 50% retracement, but Nasdaq 100 is actually slightly above, based on what I see. Now,
general, Blake, if I may interject, I think that people should be very careful in trying to fade the indices. I've been repeating myself again and again every webinar for months now. If you look at the indices in general, we had the DAX that was doing a lot better. We have the Nikkei that has accelerated higher. A lot of people showed a lot of disbelief for obvious fundamental reasons in this stock market rally. But technically speaking, we've had a very clear picture of a stealth bull market, even in the US. It doesn't matter if somebody believes that, it rightly happened so, or if this is a move that makes no sense. It doesn't really matter. If you pay attention, people that pay attention to the technicals should know that there are indices at the moment that are hitting all-time highs, like the DAX did last week. The Nasdaq is clearly showing very bullish momentum at the moment, right? Look at the RSI. Look at the RSI reading. These are not RSI readings you find on daily charts in bear markets, right?
Right. And Steve will go into much greater detail in about 45 minutes with the ForexAnalytix subscribers. So make sure that you guys are all tuned into that. And if you're not able to listen, then go over here and subscribe. It's $1 for 10 days. So try it out. Make sure you get it started, and Steve will give you his rundown in equity markets and keep you off the bearish tracks. Speaking of which, if you're looking at just equities, looking around, I think it's worth taking a note that the Nikkei is still in massive breakout territory. I'm going to go to a monthly chart just so you guys can all see. I don't think this is going to show it. I have to go to a different Nikkei chart that will show more information. Here we go. Here's a monthly chart of the Nikkei, and you can see where we're at now. Obviously, we're getting towards the end of the month, and we have about a minute. No data coming out except consumer confidence in about an hour and a half. Ryan, do you have any thoughts? End of month flows coming in?
No, it's been a bit. The model's been a bit weak. We've not heard that many from them at the moment. It's not an end of quarter or end of half year or anything. So no, we had the corporate stuff on Friday. So just go with the flow. It was for weak dollar selling, I think.
All right.
So keep an eye on that.
All right. Maybe see some dollar selling coming in, which should be interesting. Stelios, you have any last minute thoughts before we wrap things up here?
Canadian current account came out a lot better than expected. At the good old days that real data mattered, these type of data were very important. I know that this is not going to move the market, but in any case, the expectations was for a negative, for a deficit of 9.53 billion. Instead, we got negative 6.17.
You can see it right here, guys. And the dollar Canadian is just kind of consolidating above what should be pretty key support. Steve, any last minute thoughts before we pass it over to Dale?
I think that the price action today is definitely volatile. We're seeing a reversal in the dollar, but as I said before, we need to give it a little bit more time before we determine if this is the reversal or just a breather in the moves we've seen the prior couple of weeks.
All right, guys, if any one of you are long the dollar rand with me, it's still in breakout territory. We're just up against channel resistance right now, so just keep that in mind. Hey, Dale, I want to say buddy. Thanks for being here. I'm glad you had a great birthday over the weekend.
Yeah, I'm going to give Steve Volge a chance, the only one on the team that didn't wish me happy birthday. How about
happy birthday,
Steve?
Dale.
All right,
I wish you another 100.
All right, there we go. Now it's the whole team. All right. Anyway, it was a good birthday. I'm glad it's over. I'm 39.
We're always 39. Always 39.
139, you mean, right?
I hope not, Steve. Honestly, I hope. I don't want to suffer that long.
You look good for 139, Dale.
Huh?
You would look good for 139.
You mean right now?
Yeah.
Right now, yeah. Well, thank you, Brian, for your underhanded compliment. So anyway, I want to get to the interview because people are being mean to me. Bob Coleman, how are you, buddy? Trying to promote you. I know it's been a long time since I've had a promotion. Are you there, Bob?
Tell me again the name so I can look for him.
Bob Coleman.
Yes, I do see him.
I'm trying to promote him. It's not taking.
Let me get the host back and try myself as well. Yeah, I did as well, but he needs to be there and accept.
Bob. Oh, there we go. Okay, thanks, Steve.
No problem.
I think he switched over. There he is. Welcome back, Bob. How are you?
He needs to unmute himself. He's muted.
Okay, sorry about that. I
there
just
we
heard
go.
that. Okay,
you're like an amateur today. You've been on, huh? What's going on? I mean, you've been on here 3-4 times. You ought to have the buttons down. Anyway, I want to start off by acknowledging the great call you made in silver on the upside. I don't think I was not bullish, and you were pointing out all the drawdowns that you were seeing and thought maybe this was going to be the time that there was going to be such a massive short squeeze because there was enough silver to deliver. So where are we now, Bob, when it comes to that?
Yeah, right now, you're still seeing, actually, I think it was about a week and a half ago, the Shanghai Futures Exchange saw their lowest positioning of gold and silver for the year. So there was selling from those guys that moved the market downward, from that 25 area, I guess you could say.
Where was the selling? It was coming from Asia?
You had Asia, and then you also had the CTAs were, they were they were moving positioning at going short, or you have I'm just trying to pull up some of this stuff right now.
Do you have any visuals you want to show and take the screen or not?
Yeah, no, it's too early in the morning for that one.
Okay.
Okay. I got to do this not after a like 3 or 4 day weekend type thing, but no, we were at
you just have to make more meetings.
Yeah.
You know what I
Yeah.
mean?
Yeah.
AA and things like that.
Yep.
Anyway.
Definitely.
All right. Anyway, so I'm in TA. You ever gone to a TA meeting?
No.
Traders Anonymous. At first I wanted to trade, and now I can't stop myself. Huh? My name's Dale. I'm addicted to trading. Hello, Dale. Go ahead.
Right.
Yeah.
Right. I spent half my life in front of a screen. No, I
Yeah.
used to do that. I used to do a lot of block trading, day trading when I was at Morgan Stanley and those type of things. It just was, back in the 90s. But yeah, that was a different era back then. But
no, go ahead, Bob. I'm sorry.
Yeah, the positioning right now, you saw a lot of liquidation, and not only that, you saw sort of this debt ceiling run up, which kind of almost sort of, I don't say shocked the markets, but just quieted them down. Everyone was sort of waiting to see what was going to happen. There wasn't.
You think Congress is going to pass it?
Oh, I'm sure they will. Yeah, it's okay. I mean, I mean, they play the game literally every time they do this, they just play this game. From what I've understood, I guess it's basically an unlimited debt ceiling for the next year and a half or whatever that number is. But it's interesting though, because the Trump 2017 tax cuts, the sunset provisions start in 2025. So everybody's personal income tax brackets roll back upward. So if I don't know if nobody's really watching that kind of stuff. You have student loans, I guess that would that's in the, I guess with the Supreme Court.
They have to start paying again.
Yeah, which is going to be a big draw from discretionary income. There's a lot of stuff that's, I think, going to hammer or that could really, I guess, buffer the stock market. I'm not sure. The metals is a totally different story because that's going to be more of a focus on tax receipts, deficit spending, growing of the debts. I think it's not going to be typically, okay, if the stock market goes down, the metals go down with it. I think it's going to start looking at the balance of payments and all that internal stuff that no one really likes to look at.
Okay.
That'll be more of the focus. But I'm just trying to pull up here. Yeah, I mean,
you also made a good call on the gold silver ratio when I thought that it was turning the other way. Do you have a feel on this? Here's a daily of the gold silver ratio.
Yeah, if you go to the monthly, I don't know if you can pull up a monthly chart.
I can.
Because what I try to do is kind of look at the big picture and narrow back in, but that's a massive head and shoulders that you're looking at. That last rally
this is the head, and this is a right shoulder.
Yeah, and then that
this is the left shoulder.
Yeah, or you could go to 2019 that sort of. Well, I guess you could. Yeah, I mean, there's a series of sort of head and shoulders that may be building a longer term time frame.
All right, well, I got to stop you, Bob. You caught me on. I don't know what kind of movement. But anyway, if this is a head and shoulders top, it's Quasimodo.
Nothing in the metals business is very simple. I wish it was, but
anyway, if that's a head and shoulder, that's Quasimodo ringing the church bell. So anyway, we're all we all have the freedom to call charts whatever we want to call them, but so you're still looking lower for the gold silver ratio to where 50. I remember when it was at 40 for a long time in my career.
Yeah,
in the prehistoric age.
Yeah, back when, I think we're headed that direction maybe in the next couple of years. I think when silver, my guess is you're going to see a recession at some point. That's going to create more discontent. It's going to create, potentially more monetary or more fiscal stimulus. The question is, will the Fed accommodate and buy all the paper like they did before, or some type of form of yield curve control? Those are things that there's no way I can see this thing being sustainable if Congress doesn't get a cap on spending, which politically I don't think they can do anyway. But the positioning in the markets, it's kind of interesting because you're seeing you saw a lot of long liquidation on the CTA side, the futures markets last week, or come out as of last Tuesday.
Silver or gold?
Silver and gold.
Okay,
you had
both.
yeah,
Okay.
yeah. I think it was on gold. You had, I think on the future side, there was like 19,000 contracts liquidated on the long side, on the speculator side, and about 19,800 shorts were covered by commercials as of last Tuesday. So those are pretty big numbers. And then at the same time, you have Shanghai. You're seeing a lot of inventory coming off that market or being pulled from the market. So you're seeing demand for physical starting to pick back up. And at the same time, on top of that, the last 3 weeks, the contango on silver, because we rolled to the July futures, went from about a 30-cent premium to the London spot market. It's down to around 11 cents premium on the exchange for physical spread, meaning that the selling that was coming in was really more focused on the paper side than it was on the physical side. So you had that very similar to what you had last summer, where you have this sell-off, but if you look at the internals of the sell-off, it's more leveraged structured products being liquidated than, for example, the physical market throwing in the towel saying, okay, I'm done. It's never going to go up again. Those are supportive factors longer term. That's what I try to look at, because dealing with the physical metal, you could get so shook out from day to day on the price action. But I think what a lot of us are looking for is really the long-term picture. Again, not to sound like a broken record, but we're all looking out the next 5-6 years, not the next 5 or 6 weeks.
Yeah, but still, even in physical, good entries help, right?
Yes.
I mean, if you got long up here and now silver's $3 cheaper, depending upon the volume of your purchase, that made a big difference. And didn't it?
Yes, the entry does help, but the problem you run into sometimes in the physical world is you get a pullback, and someone that was interested in buying metals sees the pullback, and then all of a sudden, okay, it'll go down a little bit more, and I'll just get in when it goes down to 20. They look at this stuff and they don't really focus on long-term picture. So then the question is, if silver goes to $50, does it matter if you pick it up at 26 or at 23? I mean, if it drops. If it drops to 23 or 20, let's just say it has another bloodbath down to $20, who knows? But what happens what happens if the premiums start picking back up again on the products? You start getting tightness in the market, and all of a sudden, products have gone up about $1 or $1.50 an ounce. I mean, the physical game is a little bit different than just buying futures contracts or the ETFs. You're kind of weighing the supply and demand at the same time you're weighing the price, and that's been a challenge for people that have been waiting for lows, because the industry will come in when you get that move down in price and sort of this pickup in buying and on the dip sort of scenario, and you see this pickup in demand. All of a sudden, the industry is very quick to potentially raise rates or raise premiums on almost everything. And we saw it back in March during the bank crisis. Literally all the big online dealers jammed premiums up on 1 ounce silver products, sovereign coins, that type of thing, $3 an ounce. And it was totally uncalled for. You had a big rush of people coming in and buying, but it wasn't like it caught the market completely off guard. But that's what happens in the industry, and that's unfortunate, because the consumer is the one that ends up not being able to sort of get a good deal or get a good entry point.
Okay, well, it's near the end of the month, so I thought I'd put up the monthly chart on silver. Would you buy a candle like that? Or Bob, let me call it the way. Is it always the right time to buy?
Well, in terms Yeah, in terms of physical long term, you're looking at accumulation. So it's a dollar cost averaging type of scenario
Okay.
that I look at. For, I mean, the problem we have is it could be an event driven scenario. Like if you look at 2008 and you look at the big crash that happened after Bear Stearns, yeah, that looked horrible on the charts. And all of a sudden you had positioning get caught blindsided and was too short, and the market scurried up in 2011. The market, it's just, it's hard to call this on a day-to-day scenario when you have leveraged futures that are not only that, the open interest on lever on the COMEX has been declining since 2020. So you're not seeing the dominance that the futures markets have had. Yes, they can push the prices up or down short term, but when those prices go too low, Asia starts waking up and starts buying the physical. That there's a change that's been happening since 2020, and you saw it last year when silver broke 21 to the downside. India just came alive and just was buying everything that wasn't nailed down, and you're still seeing inventory levels. I mean, you're at 29 million ounces, 29,800,000 ounces on the registered category in the COMEX. That is just scraping along the ground, and you're seeing the London market, the LBMA inventories on silver. That's sitting at 2016 levels. That's when they started charting inventory levels. That's right at the lows. That at least that's chartable. But that's the kind of stuff. I mean, if you start seeing inventory levels start going straight to the moon and people stop buying, yes, we're looking at trouble. No question about it. But you're not seeing that. It's almost like the market's just gone quiet. Yeah, I mean, there's the old adage, never short a dull market. Maybe we, I would say that that could be true here, but the metals seem like they're never dull. There's always an event out there that it could latch onto that, could move it either way. But it seems to, I guess the question for you is this debt ceiling limit sort of agreement, if that does go in, let's just say it's voted on and passed, is that a sell on the news event for you?
Selling what?
In the general market, and the general market,
just
the
risks.
stock. Yeah, in the general stock market. Just
I'd say that they're pricing it in. I actually think we're going to miss the deadline because the easy work was done. I don't think they're going to be able to muster up the votes on both sides. I think both extremes on both sides are unhappy with this.
I guess that's what you call a settlement.
Yeah, so I don't, we'll see. I think the easy part was McCarthy and Biden coming to an agreement that, was mainly just two people, and maybe they're close, their allies and their, people, their staffs. So now it gets a little more difficult. We'll see. And if it goes through, I'd say a lot of it is priced in. I know a lot of patient bears that are waiting for 4,300 plus to get short S&Ps. So we'll see if the market accommodates them if they get it through Congress.
Yeah, and I've been saying since January.
I find this interesting. I was just looking at it, Bob. I said that last week, but with the run we've had in S&Ps, if we hold here, this will be the second higher low in VIX. So VIX isn't confirming the move in the S&Ps yet. Just something, that most people wouldn't notice. Thought I'd put it out there.
Well, it kind of goes also to the idea of if the debt ceiling limit's lifted and you get that wave of treasury supply coming into the market. It's something I've been talking about since January. It is typically it's when that debt ceiling gets lifted, that's when the markets really tank. And I think that's what you have, this classic squeeze the shorts. I mean, whether it's AI, the AI rally, or the sort of the old 70s Nifty 50, the certain number of stocks are carrying this market. I think it's what the top 6 are carrying the market, whereas the rest of the market's up 1% or something like that. It's some nominal number. So it's a very narrow. Is that what you're seeing too on your?
Yeah, everyone's talking about it's 8 stocks holding up the whole market. So why don't we get to physical? And I mean, it's your specialty. What do you recommend people buy? The little bars or coins?
It really depends on the individuals. If they already own a lot of product, there's no need to own more coins, so to speak. And just get the best price product you can. That's what I kind of look at it first is, whether it's coins or bars, just get the lowest premium product. We now have premiums up on our webpage, goldsilvervault.com. We've actually just revamped the entire website too, so it looks a little bit more modern. But it's one of those where, depending on the client's perspective, whether they want something that's tradable or barterable, to have for barter, the 1 ounce coins. But otherwise, and if you get a good deal, there's nothing wrong with coins. The premiums tend to be maybe a little bit better when you sell back. The problem is not overpaying for the product, and that's what. This last March, April timeframe, I was literally 50% of the premiums that most dealers out there were charging for almost any product. It was unbelievable how much the consumer was being overcharged, and that's something I'm trying to attack and get just educate more on with people that are interested in this market. It doesn't. The industry needs to reform itself and bring in, if they're going to bring in more of the Main Street audience, they can't gouge them. And paying $20 over spot for Silver Eagles when the Mint sells it for $2.95 over spot to the authorized distributors, there's a huge disconnect there. I mean, you're playing the premium game of hoping the premium rises, not necessarily the spot, and that's not investing, that's gambling. So it's buying finding the right products out there, going to another sovereign coin versus versus buying the US Mint product, that type of thing. Or you just go to bars, 100 ounce bars, or even 1,000 ounce bars if you're a big client. The interesting thing is, I was at the Scale Global conference last week in Las Vegas. We actually had a booth there, and it was more your macroeconomic type of political conference. They brought in a lot of big names. Boris Johnson was speaking, Hillary Clinton, a couple of different secretaries of state or secretaries of treasury were speaking, and along with Howard Marks, and a lot of breadth, I guess you could say, in terms of different subject matter. But the audience was a lot of people there, but they were primarily a lot of high net family offices, institutional investors, that type of thing. And the ones we spoke to had a lot of interest in the metals, but they all had a commonality of traditionally playing the ETFs or other structured products. And so one of the reasons I went down there was to try and help educate the larger audience into the physical world and away from sort of these structured vehicles, because it's, in a way, these structured products just act as a sponge, soaking up money that would have otherwise gone to physical metal. And I think that would have more of an impact on trying to maybe stabilize the market versus, when you're playing leveraged products, you're going to have a lot more volatility because people are whipping in and out. But that's the type of longer term focus. And you're seeing that sort of that switch over the last 3 or 4 years into physical metal because of the removal of counterparty risk, systemic risk, a multitude of other things. But as you get more volatile in this market, or you see the inflation, that's the question is, the Fed, do they try to kill inflation or kill the economy? It's going to create more distortions, I guess, kind of like what you kind of see on a daily basis when looking for divergences and things like that.
Yeah. Do you have a view on platinum coins or any kind of platinum products?
Yeah, platinum. We've been buying platinum. We've been seeing a lot of people buy platinum. It's a longer term story though. It's not a platinum is going to be more on the supply side dynamics with energy crunches coming out of South Africa and mining activity that's been greatly diminished from over the last few years, and it's more of a supply deficit story than it is demand driven. I mean, you have you know, if obviously if the economy stalls, you're going to have less car production. You're going to have less catalytic converters being needed, that type of thing.
On the economy.
Yeah, yeah. I think at some point, platinum is not known as a monetary metal, but oddly, sometimes platinum actually leads gold and silver. There are
I've
times
seen it at a $1,000 premium, not a $800,
yes.
$900 discount.
Yes, totally. And yeah, so from and you've seen car manufacturers move away from palladium into platinum because of that huge discrepancy as well with regard to the platinum palladium ratio. And it's similar to the gold silver ratio. This is very, very high. I mean, it's been sticking up here in the 80s for quite some time. To me, I think you're right. If silver tends to outperform at some point, that ratio is going to overdo it to the downside, which means silver outperforms. And so, you could easily go back to the 30s on the gold silver ratio. And that's the way to be completely disclosure, I guess, in the fund that I manage, I'm 70% weighted to silver, 30% weighted to gold. So I think, from a long-term perspective, I think silver offers more opportunity than gold does. It's one of those, it's when it moves like a hockey stick, and you just gotta kind of be patient until that time comes.
Yeah. So it's usually kind of the outperformance comes near the end of the move.
Yeah.
Is when the biggest moves are. And when silver will probably kick in, maybe gold, gold has to lead the way, right?
Yeah, possibly. I mean, silver kind of led the market out. I mean, obviously, silver underperformed when we sold off hard going into, and the gold silver ratio jumped up. But when that gold silver ratio started pulling back, silver was leading the charge. But to me, I look at more of the positioning out there because that's sort of the dry kindling that could put in place a short squeeze. And at that point, anyone who has physical metal that's short against that on the COMEX that may not want to lose that metal, whether it's fabricators, whatever it may be, they may be apt to cover and roll. And that's typically when you start to see silver start to outperform in price. The physical market tends to start to dry out when the price starts to go vertical. It's one of the first things you start to see momentum being lost, unless it's an event like the banking crisis and you had a lot of buying that was going all the way up. But at some point, the move gets accentuated by whether it's the roll on the futures contracts or just a simply short squeeze that starts to occur. But that's some of the stuff that I look at.
Okay. All right, Bob, best place for people that heard you today to contact you?
Yep. You could go to our website, goldsilvervault.com, or you could just give us a call, 208-468-3600.
Okay, Bob. I wish you continued success as the story, the precious metal story continues its, this should be its time next couple of years. So wish you well and all your clients. And just one thing, Bob does have a place for storage. If you're worried about burying it in your backyard, you want to tell them quickly about that?
Yeah, we have a $700 million all risk policy. We store about 650 million in assets. So we're kind of a unique facility and service. We're one of the largest private depositories in the country. So but I don't do a lot of advertising. Okay. I probably should, but The clients like it where things are seen and not heard, so to speak. But yeah, it's everything's off grid, not part of the financial system. It's everything's fully segregated, fully insured by Lloyd's of London. So yeah, we do try to provide a very safe environment, not only for the client, but also their privacy of their information as well. We don't really do the cloud or anything like that. So it's a very old school sort of way of trying to protect the client, from different types of elements of risk.
Thank God dinosaurs still hold policies like that. And also about the advertising, I just watched Kelly's Heroes yesterday. So you don't want to advertise all the gold you're holding.
Right.
If you watch that movie, right? World War II, and they went through German lines to get it. So anyway, Bob, thanks for being with us again today and giving us your take.
Well, my pleasure, and happy belated birthday.
Oh, okay. Thank you, Bob. All right. So go check Bob out if you're in the market for metals. The guy keeps an eye on what his competitors are doing, and he'll give you a better deal. So go ahead and shop, get your best bid and offers, call Bob. I bet he beats it. So thanks again, buddy.
Sure, my pleasure.
All right. You could join the team in 14 minutes on the Morning Edge. Let's have a great week, everyone. Trade well. Adios. You're welcome, Alexandros. See you guys tomorrow for Turnaround Tuesday. See you, Rich. Love you too, guys. See ya.